particular point. Focusing in on Forex, cryptocurrency, indexes, anything else like that that you can be able to think of. And super excited to be able to talk to everybody as we go through and start getting everything else situated when it comes down to trading and everything else like that. Hopefully I am live on YouTube. I end up trying that out. There we go. I am live on YouTube. Great. Wanted to make sure that both of those were actually working. Okay, perfect. I'm going to bounce around here a little bit, but we'll make sure we end up getting it right. All right, cool. So let's not waste any more time. Where you at? Where you at? Where you at? There we go. Good. Okay, sounds good. Okay, so here we go. Sorry about that. We got to go through the disclaimer. Then after that, we're going to get started. I'm not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from the education, you can be able to make your own informed decision. Now, understand that trading involves risk. It involves risk of being able to make money. Also involves risk of being able to lose money. So please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you end up making money today. So with that being said, what I'm getting ready to do is that one, I'm getting ready to invite each and every one of y'all to our to consider being able to join our community Discord. Obviously, if you're familiar with Discord, what it is a this is a server that allows you to be able to communicate with everybody, and we have a pretty big backing when it comes down to our overall group, and I want to make sure that everyone can be able to see what's happening when it comes down to our live trades, especially if there's some situations to where you're not able to view the actual live stream. So that's what the Discord is set up for. It's set up for education. It's set up for automation systems and indicators and books and everything else like that that will help you out when it comes down to trading. But I wanted to make sure I end up showing myself on the screen real quick. Hope everybody's doing very well. Once again, my name is Travis. I've been trading for the last 6 years professionally, and quite frankly, I've had a lot of good years. Have had, especially at the beginning. At the beginning, I ended up having a couple bad years, but over the course of the last 3 to 4 years, it's been very stable income coming in for us being able to do it. And just wanted to be able to be a vessel to be able to help everybody else out when it comes down to trading. So with that being said, we've already went through the disclaimer. We've already done placed in the information for everyone else on to the live stream on both groups. For the people on YouTube, thanks for being able to watch. For the people on Share Vision, thanks for being able to watch. And let's go ahead and get started. Let's not waste any more time. So I'm going to take myself off the screen. I'm going to readjust my photo real quick, and then after that, we'll go ahead and get started. There we go. So today, what's happening? We end up seeing that we have midterm elections that end up happening, or it's going to end up happening all day today. So if you are in the States, obviously that's what that's for. But a little bit later on today, we're going to end up having Chairman Jordan speak for the Swiss franc, and we're going to end up seeing retail sales numbers actually end up coming out already, which were a little bit positive, but still a little bit better than expected, but still in a negative when it comes down to the overall numbers. So with that being said, what we're going to end up doing is taking a look at the big three. You're not familiar with what the big three is. That is the United States dollar index, that is oil, that is gold. The reason why we look at those is because it ends up giving us a better example or a better mindset about what's going to end up happening between three major currencies. That's the United States dollar, that is Canadian dollar, and that's that's the Japanese yen and the Australian dollar, respectively. But since I have Bitcoin on the screen first, I'm going to go ahead and start off with Bitcoin because this is a pretty simple one to be able to talk about. Essentially, what has happened is this. We end up seeing, obviously, the market push up to the highs of 65 and end up having major support at 29. Since then, over the course of the last 6 to 8, make sure I said this right. Since June to where we are right now, so about June is 6. So about the last 6 months, 5 to 6 months, the market has been in consolidation, with the consolidation high being at 24.5 and the natural support being at 18.24. Well, what has happened over the course of the last few days is that the market has been in consolidation and it had a breakout of a smaller consolidation, breaking out of 20,000, going all the way up to 20,000, all the way up to 21,000 before actually being able to fall. And if you know me, I'm a person that does not like trading inside of consolidation. I'm a person that likes being able to pick my spots on the outside of it, so you can be able to get the best move that you can possibly get once the market actually ends up breaking out. So we end up talking about this in our morning session. I believe that was on Monday, where on Monday and Sunday, that we end up saying that the market was starting to be able to give us somewhat of a flag pattern. And somewhat of a flag pattern that we can be able to make a move off of, but we couldn't be able to do that because the market ended up not giving us a counter trend line break to the upside. So we said once the market broke to the upside off of this and it stayed inside, it stayed right above that 20,566 area, then after that we can be able to make a move off of that. But how about this? Instead of saying stop, say hey. Say hey to everybody.
Hey.
No, say say hey everybody.
Hey everybody.
Say good morning.
Good morning.
Okay. Go. Go, 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 go. Go ahead. Go. Since then, the market has fell down to consolidation. I actually broke inside of the midpoint of this area, 19,650. We've seen the buyers really start to buy it back up and try to hold off that area. But since then, it seems like the overall market behavior is still to the downside overall. And if that's going to end up being the case, I'm still going to end up being a waiter when it comes down to this and see if the market may end up falling back to that 1862 area. Obviously, turn the volume down. Turn the volume down. The 1862 area seems like that's going to end up being the major spot where the market's going to end up having its major, having this overall move. And because of that, I'm going to end up waiting to be able to see how the market's going to end up reacting off of that first before being able to do anything else. So Bitcoin, if I'm not going to do anything off of Bitcoin, I'm not going to do anything off of Ethereum. So I already know that. Just go ahead and just wait and see how the market's going to end up reacting overall when it comes down to that movement. So there we go. Let's go ahead and get off of that one. Bitcoin, we're done with that. Let's go ahead and take a look at the United States dollar index. So United States dollar index, what ended up happening? One, we end up having this major consolidation, or we're inside of this major consolidation of 13,282 and 13,556. So please keep that in mind. That is the major support. That is the major resistance of this overall spot. So I'm going to get rid of some of this stuff and make it a little bit clearer for me to be able to view overall when it comes down to this movement. So currently right now, the market is getting very close to 13,282, but it has not hit that area. I do expect that the market is going to end up falling, which means that I do expect that indexes are going to continue to keep on moving to the upside. Now, why am I saying that? Obviously, we take a look at this from a daily perspective. We can see that that we're moving closer to that downward channel and getting closer to actually being able to hit that downward channel, and then after that, seeing what the market is going to do for the overall movement. Since the market ended up making this overall high at 13,556, there was a fractal high inside of the consolidation that went all the way up to the 78%, which means that if it does fall, it could fall all the way down to 13,172. But the market has had problems being able to break below that 13,282 number. So until the market breaks below that 13,282 number, there's still no trade to be able to take from a conservative standpoint. Now, aggressively, if you want to take that trade, that's totally on you on what you want to be able to do. Obviously, you control your own capital. But what I have been seeing is this: market end up having a strong flush to the downside. We end up having this bearish flag that we end up getting into. Market end up dropping again. There's a D extension that's expected to be hit at 13,270 or 13,276, which basically we end up pretty much equaling up to that 13,272 or that natural support, which means that overall, as we're taking a look at this overall pair and trying to figure out how this market's going to end up moving, we've been getting a lot of continuation type of movements, where we've been seeing a lot of triangles and trying to see how the market's going to end up reacting based off of that. Until this market has truly made a decision on how it's going to end up moving, I still think that we're going to end up being a little bit more bearish overall, just because that we talk about the last 8 to 9 months, the United States dollar has just been strong. So There's still no movement on this one. There's nothing but waiting in anticipation to see how the market's going to end up reacting. But once the market does end up making a move, I'll be ready at 13,282 for it's being able to get in. I already have a pending order set up for that overall area, with the take profit being at 13,176. But that also means that the other pairs, the index pairs and all other stuff, we need to be a little bit more bullish on those movements because they move in opposite directions for the correlation. Okay, type in a Y yes if you are online, if that makes sense for us being able to make that decision. U.S. oil. Let's see. Okay, U.S. oil. What is happening? So, U.S. oil's been very fickle. U.S. oil yesterday ended up pushing all the way up to 93.73. We have a take profit at 94.59. Since then, the market has started to be able to make another consolidation inside this overall area. I don't know if y'all can notice that, but I'm going to call that the high. I'm going to call this the natural support. The natural support has been right around 91. 91 has been basically that area where the market has been kind of finding support. So quite frankly, if you would like to be able to get into a trade, we're very close to support anyway. This will probably end up being probably the best move that you can be able to make without having a fight with the people in the middle when it comes down to this movement. What we expected on Monday was the market to be able to break out, have a little bit of a retest. We thought it was going to end up going all the way down to 90. It did not happen, but it went to 91, and we are finding support at that overall level, which means that I'm very comfortable with this move on being able to trade it. What is this? And why am I on the 15-minute? Everyone, sorry about that. Okay, so I want to check and see if I was actually in the trade, and yes, okay, good, still in. Okay, so I'm looking to be able to add on. My add-on trade will end up, my stop loss will end up being below 90 when it comes down to this movement. Currently, right now, I have on my charts, I got 91, 91.25 as the actual number. So I'm going to say 89. I'm going to say 89.95. This will be able to be a little bit more safer as a add-on position. Obviously, if something goes awry, then we can be able to make that adjustment off of that. But I do like that position when it comes down to that. Now, we're slowing down when it comes down to potential profit that we could make. So I believe that if you do decide to be able to add on to this trade, then it will probably end up being a little bit more of a 1% trade when it comes down to this position. But overall, the market has found support right here, right? Oh, let's try this again. Market has found support right here, right here, and right here. Overall, we'll see if the market can be able to break above that 94.50 area and actually be able to complete that overall move. As we have gotten in off of this one, remember we end up getting in off of 86, 88, and then after that, obviously off of 90. So if you're holding on to your trades or if you're cashing out, then you probably should end up making. You probably should be in profit overall when it comes down to this pair, just in general. So continue doing what you're doing. If you have been in the trade, if you are kind of on the sideline and you're kind of waiting to be able to get into a position, I think that probably right now probably end up being the best position overall because it's closer to support than anything else. Excuse me. Excuse me. Sorry. So got that one out the way. Let's go ahead and talk about gold. Gold I haven't paid attention to in 2 days, so I want to get back into this one. Excuse me. Sorry about that. Gold from a weekly perspective, where we at? Market had a strong support at 16.18. I'm gonna say 16.15 as the number, but 16.18 was the natural support. We ended up taking a couple of trades where we ended up trading down when the market broke below 16.66. all the way down to 16.15 and end up hitting that position. Now, from a consolidation standpoint, there's a major consolidation at 16.18 on the top of the resistance. We end up being at 17.25. We end up talking about trying to possibly be able to get in when it came down to consolidation inside of consolidation, and that is where we at right now. Market ended up having a resounding move from 16.18 all the way up to that 16.80 position to the upside. If you end up catching that move, congratulations to you. I just was not one of those people that end up doing that. I end up saying that I'll be interested in being able to get in the move once the market end up breaking above 16.71. Currently, right now, we end up having a breakout. We had a retest. Currently, I would like to be able to see that this counter trend line break is broken so we can be able to place our stop loss in this area and feel a little bit more comfortable about how we're actually trading this. I will not get into this entry until the market breaks above 16.71 and maintains with a counter trend line break. But we had two different positions where we were looking at being able to get out. 16.71 all the way up to 17.29, and then after that 16.71 all the way up to the TP, which we end up being at 17.40. Okay, so I'm interested in getting in 2 hours in the buy zone. There's no counter trend line break as of yet. Until that counter trend line break happens, and there's no trade to be able to take. But once that does happen, then after that I'll be interested in being able to make a move off of that. But for right now, really nothing to be able to do at this particular point. Okay, good to go. All right, so done with that. Let's go ahead and get into the pairs that we end up talking about yesterday. Some of the buy trades that we end up getting into, some of the automation trades that we end up getting into overall. We end up doing US 30. We end up doing end up getting in the US 30, end up getting the NAS 100. NAS 100 I exit out of early. And then after that, we end up getting into DAX, and DAX was from our automation systems, the FX Striker, and well, actually, let's talk about US yen real quick. US yen end up getting into a sell trade off of that one. You have been trading that with us, then quite frankly, you know, I've been looking at this since the market ended up getting up to 148. I'm glad that it's finally starting to be able to make its move, because we talked about 144.90 as being a take profit position off of this move. It took a while to be able to get there. But currently right now we are in a very good position to be able to see this thing kind of ride out. So let me see, I want to make sure that get half of the stuff off the screen. Okay, I can see that oil starting to push up a little bit more, which is good, obviously. End up getting into another trade on US yen at 146, 146.43. Have a stop loss at 147.20 and a take profit at 142.93. Now let's talk about those positions. Let's talk about why we end up taking those positions, what made us get in, end up going from there. It's kind of twofold. So I'm gonna end up pulling this up on TradingView, and I'm gonna end up pulling this up on my other charts as well. So let's talk about a couple things. Got a lot of stuff going on that chart. Let's go to this one real quick. Okay. So from a weekly standpoint, we talked about this market basically falling into an 80-20 rule. And what that rule basically states is, or what that rule basically is if the market only retraces to the 23.6, in which it did right here. Market broke the B, only retraced to the 23.6, and did not go to the 38.2. Everyone give me one quick second. Hold on for a second. Okay, sorry about that. Where was I? Ba, 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 ba. Okay, cool. So from a weekly perspective, what I ended up saying was this: I felt like the market was overbought. Obviously, the United States dollar has been basically having a stronghold on the market over the course of the last year, um, and it gotten parabolic. So on this third wave, as the market was basically pushing up, it ended up going to all-time highs, and based off it being at all-time highs, um, the one thing that I've always learned, the one thing that I learned from my mentor was that you do not buy future high prices. Meaning that if the market's done got all the way up to an all-time high, there's no reason to be able to keep on buying at an all-time high. You're going to end up having diminishing returns if that does happen. So with that being said, I was looking to be able to short this because I've seen that Japan was starting to look at being able to get back into doing a little bit of intervention in the market after the market ended up breaking above 150, 151. And remember, we ended up having that one big move that ended up happening where the market ended up moving about 500 points. It moved all the way up to 151, then after that fell all the way down to the low was 146.17, and actually ended up breaking to the downside off of that move. That next week, the market pushed back up, and then after that broke down again, and then from there broke a counter trend line break and has held since the market has went to 148.13 when it came down to that overall move. Now, the first phase of this move to the downside is 144.90. You take a look at that, that will end up being past resistance, turn future support if that does happen, which is right here. So I do expect that the market is going to end up pushing down to that overall area, in which it did the first time, popped back up, and actually made a fractal, high to be able to work with to the downside. And if you take a look at this, the take profit based off of that position will end up being 141.70, and that's how we end up getting our overall take profit number, which was the natural support of the consolidation. And if you take a look at it from a field perspective, there is obviously there's similar positions on what a market could potentially end up going. So this is our A, here goes our B, here goes our C. The extension is expected to be able to fall. If you trade Fibonacci's or if you trade breakout positions or anything else like that, but especially Fibonacci's, you want to be able to catch the market as the market is breaking that counter trend line break and starting to move towards the downside, and remain to be in that move and start to be able to add on very heavily once it breaks the B, because once it breaks the B, there's a little bit more in the push zone that, and you can be able to have other people trading with you that truly believe in this overall move without having to be able to, without being able to fight as much. So from a 2-hour perspective, what is happening? One, I end up getting into a trade once again at 146.43. 146.43 was this counter trend line break that ended up happening right here. But essentially, what you hopefully, if you've noticed it, the market has went from being able to break out of or doing consolidation breakouts based off of high volume nodes to actually just really starting to give way more, way more mean regression, way more ABCD type of movements. Market pushes up, give us a little bit of a flag, breaks down, pushes up, give us a flag. So we're looking at another retest of this move and expecting that the market's going to end up breaking down again. And as long as the market does not break the high, then you're in a very good position just to be able to stay in that move and be able to ride it out from there. And that's exactly what I'm expecting to be able to do off of this movement. Like I said, my stop loss was at 147.20 on this particular move, but have been adding on to the trades as the market has been falling down. But ultimately, I think that the market will get down to this point. Do I know how long it's going to end up taking to get down to that point? Absolutely not. But we just know from this trading this in general and kind of having a good feel for what a market is actually going based off of support and resistance. This is the position where the market's going to end up going ultimately. So I feel pretty good about that. We'll just see how the market kind of reacts off of that. Obviously, there's going to have to be some news that's going to have to be negative towards the United States dollar and positive towards the Yeah, negative towards the United States dollar and positive towards the Japanese yen. And whatever that is going to end up being, that will end up being kind of the last straw to be able to make the market break below this 144 position. Once it breaks below that 144 position, then after that, I think it'll end up hitting that 141 position rather quickly. So there we go. That is US yen. Now, from an Ikimoku breakout perspective, we end up having that sale. We end up having that sale position basically get kicked in two different positions. The first one end up getting kicked in right around 146.94, which was an actual loss. And then after that, we end up having another crossover break once the market end up breaking this actual low again, where my automation system end up catching it at 146.60. So it's pretty much the same when it comes down to this. We want to be able to make sure that we already know that the market is bearish. We already know that we're leaving a high volume node and starting to get into another low volume node. And that low volume node in which we're in that position will end up leading us to 144.92. I do feel pretty comfortable about this overall position. I just think that obviously we need a little bit more of a catalyst to be able to make the market move. And quite frankly, if you want to be able to get in and feel a little bit more comfortable, I would say look at being able to place in another pending order at 146.17. First take profit will end up being at 145.82, and then obviously second take profit will end up being at 144.95 as another position, which is basically, if we go back, which is basically this position right here. Okay, so there we go. Hopefully that ends up making sense for our people that are interested in being able to make that move. As long as we end up getting some downside movement and we keep on seeing that the market keeps on maneuvering to the downside, then I'm going to keep on making entries. See if we can be able to squeeze out as much movement as we can off of this one. All right, so that is that. Let's go into US 30 real quick. So US 30 from a daily perspective found natural support at 28,700. Since then, the market has popped up about how many points has it been? Since then, the market has popped up 4,000 points over the course of the last probably over the course of the last month, because typically in October we end up having that strong push. Now we end up talking about a pending sale order because I didn't think that the market was going to I thought that the market was going to fall down a little bit more, but we also end up talking about there could be a chance that the market could be able to push to the upside after being able to break this consolidation high. We knew where the consolidation points were at, and we knew that we were pushing back up to this natural resistance up here right around at 32,976. And since then, my automation system actually ended up catching a buy off of that move. Currently right now, let's see. Currently right now off of that position, up about, it's up 8 off of that movement. Entry was placed in at 32,371, and I ended up just placing in another entry at 32,880 based off of this entry. We'll talk about that entry based off of 32,880 and the reason why we end up getting into that ultimately overall. But market has hit it ended up hitting support. It did not break below the support, went up to resistance. We knew that the resistance number was 32,500. Since then, the market ended up breaking above this area. Now remember, when you have a block for block type of move, that means that the market will end up breaking this block and typically exploding up to the top of the resistance of this movement. And then if it breaks this resistance, we have a stronger and we have a very large push that we can be able to go after from that 31,100 area all the way up to 33,100 area all the way up to 33,820 as the next biggest move, and that was basically the top of where the market was in early September. Early September when it came down to its biggest push. So the question is, are we going to continue to keep that overall pace to the upside? And you would think that we would, primarily because of one reason. We take a look at the United States dollar index. What's the direction of the United States dollar index at this particular point? It has been bearish. And because it has been bearish, now we should expect that the market could continue to keep on pushing up. Now, this area right here is going to be a very large test, and seeing that the market is going to end up breaking out. So we see the market end up breaking up when it came down to news. I think that was based off of Chair Powell. The market ended up basically spiking down to 32,400 or 32,400. I'm going to say 32,500. Push back up. We end up having FOMC news that ended up pushing the market down to the downside. Found consolidation support, and then after that has started to push up towards this resistance. So this area right here is going to end up being the area where we have to be able to know if the market is going to end up breaking out. If that does happen, then obviously that's going to be a long, drawn-out trade that we can be able to get into after 33,100 all the way to 33,800. So going big fish hunting based off this movement. This is the larger consolidation block. Overall, I'm going to place that in as yellow so people can be able to see that a little bit more. If it does break out of that area, then it has a large free run area that the market could potentially go to. Okay, so please keep that in mind as the market is being able to make its movement. Now, if it rejects off, then I'm going to end up taking partial profit, and then after that, I see how the market kind of reacts. But overall, we are getting to a point to where this market could be able to break out. We've been in this larger consolidation for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days at this particular point. Doesn't necessarily mean that it's going to end up continue to be able to make a move to the upside, but we do have to keep that in mind. If it does reject off hard at 32,960, then that means that we probably need to go ahead and take profit and kind of move along as this market is kind of making this decision. Okay. Let's see. CNBC. I don't think that the midterm elections can be able to affect what's happening with the market. Unless there's some major change when it comes down to Republicans being able to get a little bit more of a stronghold, but you won't find that out until later on today. Bloomberg. I don't see anything else on that either. We'll see how that kind of reacts. So I just stay away from that right now. I end up getting into. We end up with DAX today. Let's take a look at what's happening with DAX, and then after that, making our move from there. DAX is in consolidation. Let's see, German 40. Where's my information on this chart? Oh, I did German 30. Sorry. Okay, take profit's been hit off of that position. So, or that pocket has been closed. This is what we was looking for. So, since market fell down all the way to these lows in the early portion of October, which was right around 11,860. Market ended up having a strong counter trend line break based off of this movement. Then after that, started to push up overall. Once again, strong counter trend line break right here. Market pushed up again, strong counter trend line break over here, which means that the market is truly trending at this particular point. The take profit position that we wanted to get out at was 13,600, based off of that movement. That was based more off of consolidation breakouts. But since then, the market has been continuing to make its move up to the upside overall when it comes down to that phase. So I'm going to take a look at, I'm going to start taking a look at Fibonacci's from the bottom and see what is the correlation of this, and see where this market could potentially end up going overall. And then after that, we can be able to have a better mindset about what's happening with the movement. From a fear perspective, there goes your ABCD, went all the way up to the 8.6, completed its D extension at 13.16, made a fractal high finally at actually has not even created a fractal high right here. That was the last fractal high based off the daily. So our new ABCD sequence actually starts right here. So I can get rid of that. Now, based off of this one, going back to the 80-20 rule, the market only retraced down to the 23.6, which means that we'll see the market try to get up to 14,000. I'm sorry, not 14,000. Market may end up trying to be able to break above. No, I said that right. Yeah, I said that right. 14,000 will probably end up being the area where you're going to end up seeing the most rejection off of this overall movement, based off of the 80-20 rule. We are in consolidation right now as we speak. I want to see how the market kind of reacts off of that as a whole. But for me, probably not going to do all that much with this one. I'm going to let this one kind of set. We took profit off of it based off of, well, the take profit position was based off of 13,606. From a breakout position, I got stopped out. Well, no, I remember. I ended up getting placed in. I made the entry. I took a buy. Got halfway here, took profit. Market fell all the way down. Since then, there was a counter trend line break buy that you could possibly be able to get into, which I did not get into. But now, since we know that the market behavior is truly this counter trend line breaks, and watching the market kind of get down to a daily buy zone or something like that to be able to get into, then there'll be something to be able to pay attention to overall. Because I don't know if y'all can notice. I don't know if y'all notice it. Even with the gap, we end up getting the same thing right there. But currently, right now, we're at a consolidation point right here. So I think I might be interested in just taking profit off of this position. Yeah, I think I might be interested in taking profit off of this position. I'm going to go ahead and do that. I'm going to take profit off my largest position right here. I'm going to let the other two positions kind of rock out. We'll see what happens with that. All right, so there we go. Hopefully everybody ends up learning some stuff off of this one. Hopefully everybody ends up having a very good day when it comes down to trading. I do appreciate the people that end up taking a stop by and end up watching what we end up doing from this. We will be on stream, Share Vision, for the remainder of this week, and obviously on YouTube for the remainder of this week, and going through and kind of getting everything else situated. Like always, make sure that you end up planning your trade and trading your plan. I'll see each and every one of y'all in the next video. I do appreciate everybody's time. Take it easy.